New Zealand is perhaps best known for its astonishing natural beauty, but it is also home to one of the fastest growing sovereign wealth funds in the world. The New Zealand Superannuation Fund, which began investing in 2003, has since become an industry leader known for its innovative total portfolio strategy thanks to its CEO, Adrian Orr. The 51-year-old former central banker took charge of the sovereign fund in February 2007, only months before the onset of the global financial crisis. Since then, the fund has become renowned for its ability to make nimble, opportunistic investments. On a clear, warm day in late February, Orr sat down with institutional investor to reflect on the sovereign wealth fund's first 10 years.
Financial crisis came along in 2007. We'd been operating the fund for about 3 years. It began in 2007 and finished in 2009. It didn't reshape our thinking about risk, it just reinforced a lot of what we had been talking about at the fund. We'd focused very hard on the risk factors that we needed to expose ourselves to get rewarded, to make the returns, and we'd spoken a lot with the board and team about how to prepare for the volatility that happens in long-term funds, because if you can weather the volatility and take opportunities, then you will be very successful. Investors always tend to make a lot of mistakes. For a start, investment is risky. If you can find something that is 60% probability of working, well, then that's probably a good investment, as long as you can repeat that investment ongoing through time. I think investors suffer all of the human frailties. We're myopic. We tend to be very short-term. We tend to prefer to move with the pack rather than stick with your initial plans, and career risk or reputation risk dominates in the short term. So if you can fight those or set up structures that allow you to work against those natural instincts, you will be a much more successful long-term investor. Have frameworks where you take opportunities when times feel nervous. Have communications that allow you to talk about the long term and allow you to stay focused on the long term. And have strong, deep investment beliefs so that you can always return to the beliefs and think hard about that when you are feeling most nervous. I think the greatest challenge of running a sovereign wealth fund is that we're the new kids on the block, and I say that we're the new kids both domestically within the country. In New Zealand, we don't have a lot of large financial institutions investing globally, so a very high level of expectations from the public and a very high learning curve for us to be able to explain to the public what we do and what we don't do. To have the license to operate in a country like New Zealand, we have to operate incredibly transparently. So, I can read everything about my credit card if you really want to sleep at night on the website, from salaries through to investments. It's a continuous communication challenge. The fund has been in continual evolution, and over the next 5 years we continue to have innovative plans. It's a competitive industry, so if you're not innovating in the way you think about investment, you will fall behind. You won't get access to the risks. Our big desires in the next 5 years are to be able to move faster around investment decision making, to be truly opportunistic, to be in a position where we can make decisions if great opportunities come up. To have the staff both have the capability in-house, but also the boldness, the courage to make those decisions through. So we're spending a lot of time on providing people clarity around their risk budget, autonomy in their decision making, and the culture within the institution to be able to be constructive and focus on what we're really trying to achieve, rather than worrying about the short-term noise.